Hi everyone, and welcome to P-Bolic Notes. Today is Monday, March the 14th, 2022. Welcome to my channel. My name is Michael Kirkchin. Today I have a great video for y'all, and I'll be looking at some new stuff that I'm paying close attention to. I'd like to share what I'm seeing on the markets today. Before I get started, just a quick reminder, this is not a financial advice. I'm not a financial advisor, and whatever I share with you today is just investments that I do personally. And before doing any investments in this space, do your own research and consult your own advisor. I will share with you my computer screen and show you what I'm looking at today. The first thing that I'm looking at is going to be the 10-year treasuries, because I find that it's this is what I had learned from Raoul Paul's GMI report, and it's very accurate what Raoul Paul had said, that when the 10-year treasuries get really at this on this chart of truth that he calls, and as the 10-year treasuries start getting close to the top mark, the top line of this trend line, that's when we have had recessions 4 times in the last 40 years. So meaning that if you go back to the early 80s, each time interest rates got to such a high figure that it got basically close to this the high end of this chart, that's when we basically had a recession that followed in the next 18 months. So I'm really hoping that it doesn't get there. Obviously, high interest rates have a dramatic impact on real estate, commercial real estate, which is a field that I'm also in, and also has a dramatic impact on all the technology stocks. So I'm kind of paying attention to what happens to these interest rates, really hoping that things get stabilized and that the 10-year treasuries kind of stop this uptrend. Because if we look at what's happened in the last couple of months, since August 2021, it's gone up from 1.18% to today to 2.143%. So that's it's almost doubled. Really, it's very dramatic for those who are borrowing, and also for those who are paying this interest, and especially for those of us who are watching the recession line. Secondly, another thing I'd like to look at today as well is what's going on there in the Chinese market. I looked at today was, again, it was kind of very interesting what's going on there. I think it's more in line with what's happening in Europe with the war with Russia and Ukraine. But in the Chinese market, this is the CSI300 index, and this is the weekly chart. And with those guys, they basically have been kind of, I mean, really since March 2020. This is coinciding with the start of the COVID pandemic. The market went on this very nice bull run, and then it looks like in February of last year was a top, and since then it's been trending downwards. But look, it looks like what happened today. They had I guess this week really, it looks like they've broken this 100-week moving average. So if it breaks this 100-week moving average, it's obviously a pretty bearish signal. And now today, so it broke the 100-week moving average in January of this year, and today it looks like, or this week, it looks like it's if this holds, they will be basically breaking the 200-week moving average. So these are bearish signals. It's not great for the supply chain. It's not great for the impact it can have on the rest of the world that are using China for their imports. As far as the stock market is concerned, really, I mean, it looks like it wasn't really that, let's say, an interesting day today. Even though we're seeing that we've been on the S&P 500, it's been a negative trend really since January, when it had a high around 4,800 points. Today we're at around 4,135, so that's a 20% drop really in a short period. So we're kind of hoping that this reverses, and that it doesn't continue going down to the 100-week moving average. And as far as the Nasdaq is concerned, Nasdaq has been a bit more bearish than S&P, which is normal. So it looks like the last couple of times that we were in this territory really is that whenever we went down to the 100-week moving average, it looks like we went on a bull run. So if If this holds true for this time as well, then that means that there's a potential that the Nasdaq may go down a little more, and then eventually go on a hopeful bull run. So I'll keep a close eye on this over the next couple of weeks, see how this goes, and we're really hoping that it does not go down to the 200-week moving average, because it hasn't really been there in a long time. And I'm making sure that I keep a close eye on this, so that really hoping that we have the Nasdaq, the US 100 index go back on a bull run, because when the Nasdaq's doing well, the crypto space does well as well in general. As far as the two main tokens of our crypto space are concerned, which are Bitcoin and Ethereum. So Bitcoin is still below its 20-week SMA and its 21-week EMA lines. So meaning that it's still in bear market territory. And whenever Bitcoin does this, then if we look at what altcoins do in this kind of period, then altcoins also don't behave very well. And if you look at if you look at when this start period was, it looks like by sometime by mid-November is when Bitcoin started basically trending downwards, and it actually broke this 20-week SMA and the 21-week EMA the week of December 6th. And if you go look at what's going on with Ethereum versus Bitcoin as of December 6th, and here it is, it's been basically on this bear market, meaning that Ethereum has been bleeding against Bitcoin since the start of this Bitcoin bear market. So I'm keeping a close eye on this as well, and we'll update you all once things improve in the coming weeks. Thank you so much for watching, and looking forward to hearing your comments and your feedback. Thanks, everyone.